Hello, ladies and gentlemen. Welcome back to YouTube. And in today's episode, we are looking at Euro USD. Now, the market has been heading down significantly since the start of October, which is the first month of Q4. And in 2 weeks' time, we have the elections coming up in America. And who is going to be the new president? Are we going to have Donald Trump? Or are we going to have Kamala Harris? I mean, who are you rooting for? Whether you can vote or not, you should be rooting for someone. But then what we have in front of us, of course, is a chart of the Euro USD. And we're going to be examining the Euro USD positions from a technical standpoint, and of course, we're going to be looking at it from the stand of the commitments of traders report. So we're going to be looking at this to see how institutions are positioned and what could potentially be the next direction of the market. Now, of course, whoever wins the elections in the coming week or in 2 weeks, that remains to be seen. But for now, as traders, let us trade the market we have in front of us. Let us continue to pay attention to what price is doing. And in looking at this, that gives us a clue as to how we will be positioning ourselves. But one thing I will tell you is that you need to actually stand down. This is the time that you need to stand down. Yes, I have been heavily bullish on the euro, but then the market has traded down significantly, and it makes no sense to be holding on to a bullish bias where you see the market going the other way. Even though I do believe that following this huge run to the downside, it could be time for the market to take a breather, for the market to actually pull back and continue its steam in its original direction. But right now, I think if you're selling right now, you might be a little bit too late to the party. And we're going to get into the chart, and you will find out why you are a bit too late to the party. Now, before we get into the chart, please take a moment, hit the subscribe button. We are now on the final lap to hitting 3,000 subscribers just before the end of the year. We are 2.9K now. Very big thank you to all of you who have subscribed, and of course, keep coming back to watch the videos that we have on this channel. So please hit the subscribe button, share the video with your friends, leave a comment so that YouTube puts us in front of more people. And going forward, we are looking to hit 3,000 subscribers right before the end of December 2024. All right. So if you've done that, if you've subscribed, thank you very much. If not, please go back, hit that subscribe button, and I will see you on the chart. Thank you. All right. So looking at the chart here on Euro USD, we've had an insanely bearish month. We just opened the month and we had that wild drop, and we just took out the low of this was the low. I think this was the low of August. We just took the lows of August, and the market is, I mean, the market definitely knows it has taken something there. But if we do look at some really prime, if we look at the area properly, we still do not want to divorce the fact that, like I said, we're heavily bullish, and at some point the market is definitely bound to correct. If we do take these lows, then we know that yes, we've taken these lows as well. If we take these lows, we know we've taken it, but then the market most likely might be held up in this order block in here. Remember, we have a break in market structure. We equally have a buy side liquidity sitting above, so there's a chance that the market might reach for that. And also we have, I mean, this is what it looks like. Bearish quarter, last bearish quarter, the market comes down heavily, mitigates this, and there is a good chance we could continue going. Also, given the fact that we have this entire zone right where we've seen some significant buying in the past. If we go back all the way, you could see this was very significant buy pressure, just like we've always talked about. All of that has happened in these areas, right? So if that is the case, if that is what we're looking at, we need to come down to lower time frames and begin to find a way to frame the setup. So of course, we're looking at it here on the weekly time frame. One thing you would notice is that this bearish impulse here, we have a bearish impulse, very strong impulse to the downside, and there's no market that can continue to just move in one direction, for relative, just like that permanently. I mean, for every instance, every trend turns around at some point. For instance, we had this, it turned around, we had this, it turned around, we had this, it turned around, it breached the low. The market never just continues. I mean, yes, you could argue that this one was one hell of a long downtrend, but then it did take some very significant breather that even had the market trade into these zones here. And since then, we've not been up to those highs, right? So where does that leave us? It leaves us somewhere. We have a market that has, I mean, this is one hell of a significant push to the downside. And if you know anything about how we look at the charts, we have a low. The market has cleared this low. And while the market has cleared this low, there's a chance, getting down to the daily time frame, there's a chance that it could keep going. But of course, at some point, the market definitely has to breathe. The market definitely has to breathe. So where's the 50% we have from high to low? We have the 50% somewhere in here. We have a liquidity zone right at that level there. So what we might be looking at is, if we're going to continue bearish, I would encourage you not to actually come in here and try to sell, primarily because we have if you do that, you will be a bit too late to the party, right? So let's mark in some lows that are significant in the range. We have this high quite significant to the range. So I mean, the market is, stuck between this high and this low. So we could easily start coming down again. That's a very strong probability. But if you want to do that, if you want to take that sell, I will encourage you, don't come in here and try to sell at these lows. These markets, this is heavily overextended. I mean, I was looking to get long from in here. The longs didn't come. We continued to barrel down. I was looking to get long from in here. The longs didn't come. We continued to barrel down. Now, does that mean I would just jump in and sell now? Absolutely not. I will not jump in and sell. Of course, in just a moment, we're going to look at the commitment of traders report. I will not just jump in and sell. What I'm going to do is that definitely I will need to see some form of pullback, and that pullback is what will inform my decision. So we've run these lows. Makes no sense to be selling at the tip. I mean, this is basically a market that is heavily overextended. I cannot be trying to, feel like the strong guy and trying to just short this anticipating that this run is going to continue. No, at some point the market has to find a way to creep its way back up, maybe make some corrections, close some fair value gaps like in here, and then we can have that continuation if we are going to continue to at least be bearish on the asset. Or if the market decides that it wants to, play long term and continue going higher, then that's a different situation altogether. So this is basically looking at it on the technicals. And of course, if we get down to the H4, what it will take for us to begin to invert would be, okay, we have this. This is the last high here. The market is not taking that out. There's the last high that gave us a new low. The market is just respecting that as equal highs. If we see a switch in here, if we see a switch here, or we see a switch here, what I would do is, because this is a very strong downtrend that we've seen, I mean, very strong intermediate downtrend. This is basically the month of October you have in front of your eyes right here. This is October lows, right? So instead of just trying to get long, I would encourage you to leave these alone. I would encourage you to just not touch this. Primarily because, I mean, except we, form some clear structure on this side of the market heading up, then you can, look to get in and out and all that. But I would really, really prefer a situation where we trade into these zones and we see what decisions the market wants to make, whether it wants to trade lower from here or it wants to continue to trade above from this zone. That's exactly how you should be looking at it as a trader. And if it wants to trade above from this zone, then you should be trading from this zone. That is if it crosses the 50% mark and sustains bullish momentum. So then you should do that. But if the market reaches this zone and decides that, all right, not interested in going up, it wants to go higher, then at this point you'll be taking a safe trade from here. I mean, no trade is ever really safe. And for those of you who look at it support and resistance wise, there is a significant portion of the support and resistance in these areas, something like that. That's it. So that's exactly what you would be looking at in that zone. So, and that would now mean that this market would have broken control of these structures and retrace at least a 50% or 60%. That's how I like to trade. I like to see a minimum of 50 to 60% retracement on the asset. Then I start to look for, whatever it is that I want to look for. So that's exactly how it is. And of course, that's how I'm going to be approaching it personally. And of course, in just a moment, I'm going to take you over to the COT report and we're going to see what the institutions are doing over there. All right, so looking at the commitment of traders report, it is very clear that institutions have moved, have come down significantly on the net positioning. That's why you see the market dropping from where we went from 100K plus 100K in, on 3rd of September. Right now, 15th of October, with the latest release, we are down to 17K. Net positions. Most likely this might end up being in the negative, and with all of these closes, that's exactly why you are seeing the heavy bearishness that we have on the euro. So most likely the institutions are set to continue going down, but one thing you must know is you cannot just get in here and short this because institutions are shorting. You want to at least see some decent pullback, and then from there you want to begin to look for your opportunities to actually short this asset. So ladies and gentlemen, thank you very much for sticking all the way to the end. If you did, you're welcome to join us at chikwatotrading.com. Head over to chikwatotrading.com, check out our website, see what we have going on in there. You can look at the website. That is your gateway to join us on the free Telegram and of course on the free Discord community as well. And right now, because we have a new partnership in game with TB Globe, as a result of this partnership, you are able able to get access to the premium community. In fact, if you sign up with TB Globe, even before you make a deposit, you are going to get a 7-day free trial of the events or the, what we do within the premium community. You're going to be able to watch us trade. You're going to be able to join the analysis. And of course, you're going to be able to participate in the webinars and activities that we do offer within the premium community. So of course, why not? What's the harm in trying? Sign up with TB Globe, get access to the community for a 7-day free trial. And of course, when you like it, the moment you make a minimum deposit, you get access to join the community for full time, So that's exactly what we're doing. And that's exactly the offer that we're bringing you as a result of our partnership with TB Globe. So ladies and gentlemen, until I see you next time, please, whatever you are up to in the markets, I sincerely hope it's profitable. And I wish you good luck and good trading going forward. Cheers.